Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I go any further, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And hold on just a second. It looks like my YouTube stream is a little blurry. I don't know if there's anything that I can do about that. Okay, that's better. Okay, so as a reminder, the focus of my presentation and the Options with Doug chat room and Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and that's based on positional analysis. And I look at how traders and market makers are positioned in the options market and how those positions change from day to day to help develop a thesis regarding expected volatility and trading range for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero. And I think this approach provides a significant edge. Other traders use technical analysis or fundamental analysis, and again, I think this combination of positional analysis as well as looking at real-time order flow in Bookmap and real-time market maker hedging flow on Spotgamma Hero provides a significant edge. And questions and comments are welcome, and I will be watching both the Bookmap Discord chat as well as the chat on YouTube. Okay, let's get started. So what I want to talk about today, and I've got quite a bit, is first of all news. I'll go over economic data, events, and earnings for the next week or two. And then I want to do a review of Friday. Remember, I talked about the put Vanna rally and how that helped contribute to the rally on Friday, and also how you could have anticipated the rally in your planning process. And then we'll go over our positional analysis for today, and then we'll talk about some setups, and there were some great setups today. Okay, first news, economic data, and nothing major coming out this week, except maybe the PCE on Friday. But anyway, let's see what we have. So first of all, tomorrow, that is Tuesday the 24th, there is some PMI data coming out at 9:45. And next on Thursday, durable goods and GDP. And that's at 8:30 a.m. Eastern Time. And then finally on Friday, there are a couple of items. PCE, and apparently this is what the FOMC looks at. And recall the following week, on February 1st or January 31st and February 1st is the next or the first FOMC meeting of the year, and the announcement and press conference is on Wednesday, February 1st. So this is the PCE, and then the Michigan Consumer Sentiment at 8:30 and 10 a.m. So that's the economic data coming up. And again, I mentioned the big event, the FOMC meeting next week on Tuesday, and the announcement and press conference on Wednesday. And then there are a couple of earnings announcements this week for stocks that are in my watch list. And Microsoft announces earnings on Tuesday, tomorrow, after the market close, and then Tesla on Wednesday, again after the market close. Okay, so that's the news coming up, events to watch out for. The items that I mentioned could be market movers, the economic data this week, and certainly the FOMC meeting next week, and that will also impact how traders are positioning themselves into that event. All right, let's do a review. I want to do a review of Friday. And give me just a moment. I've got a number of screenshots that I want to go through. And I'm going to start. So again, this is a review of Friday. This is options, excuse me, options expiration last Friday. And things to point out here. First, gamma notional for SPX in this left column here, and SPY on the right. And this number minus 2187, I consider that a full tank of put fuel. So there's the potential on around big events or options expiration for changes in implied volatility, and also a lot of these put options were going to expire. So what this means is that traders with long puts, very long puts, market makers are short puts, and they are short futures to hedge their delta exposure. And as price increases, as that's what happened on Friday, so price increases, implied volatility drops, and market makers can buy back their short hedges. So I'm setting the scene. This is Friday morning during our planning process, and we see this and look at the thing that comes to my mind when I see this minus 2187 is rally potential. And this is just reinforcing that that idea of a negative gamma scenario. This is the Vanna model for SPX, and this is showing that traders, again, traders being long puts, market makers are short puts, and if price decreases, so they have to sell futures to hedge their delta exposure, and as price increases, they can buy back those short futures. And here's the SPY chart, SPY Vanna model. Oops. Again, just a steeper line, indicating that in the case of Friday, market makers again are short futures to hedge their delta exposure, and as price increases, they can buy back those short futures. And again, remember, we're in the planning process now. Still looking at the information that I look at every day and talk about every day. And the next is noting, again, this is options expiration Friday, noting the amount of gamma that expires that day on the 20th, January 20th. So that is getting up to a somewhat significant number. So those puts are going to be gone at the end of the day. And actually this is SPX, so that includes the AM settlement, which happens at the RTH Open, as well as the PM settlement. So this is from Spotgamma Equity Hub, looking at the 5-day history. And this is for SPY. And note here that a larger number, the amount of gamma expiring on that Friday, 37.75%. So again, those puts are going to expire on Friday, and they're going to lose, if price increases, they're going to lose value very quickly, and market makers' delta exposure will decrease. And here's the gamma model. This is for SPX. And the green line is the current expiration, and the black line is the next expiration. And this is just reinforcing that idea of the gamma expiring at the end of the day. Look at the same gamma model for SPY. And again, reinforcing that idea of that gamma expiring. And one other chart I want to take a look at. Actually, a couple of the charts. So this is showing the put dominance, slight put dominance for SPX. Then notice the blue line, the put gamma is larger or more negative than the call gamma. And even more so for SPY. More put dominance for SPY, and that just goes along with the steeper Vanna curve and the greater amount of the more negative gamma notional. And then finally, one last thing to look at, and all this information is from Spotgamma, and this is the delta notional by expiration for SPX, SPY, QQQ, and NDX. And this is again by expiration. So what we're noting here is that's the January, the 20th, January monthly expiration. And again, notice the dominance of puts. So below the zero line, that's negative gamma, or delta in this case, and that's put delta, negative delta. So that all expired on Friday. And one last thing to take a look at. So this is all in the planning process on Friday, setting the stage so we see that large negative gamma notional. And again, the first thing that comes to my mind is rally potential. If the market gets going, that's a full tank of fuel and could lead to a rally. as, again, puts expire, implied volatility drops, price increases, market makers' delta exposure decreases, and they can buy back their short hedges. And then one last thing, and this is an SPX chart from Friday. This is Friday, and think about, again, just doing your planning process in the morning. And thing to note, this is the 3,900 level. This may be a little bit difficult to see, but this top line is the 3,900 put wall, and that level can be expected to act as support. So we know that that level is in play. And here, right after the open, SPX moves down, tests that level, then goes down to this combo L1 level and reverses higher. And then, as you can see, rallies for the rest of the day. So that is the SPX, the Thinkorswim chart with the Spotgamma levels here. And this is VIX. So this is kind of a proxy for implied volatility. So this is showing that as SPX was increasing, implied volatility is dropping. So that's what we were looking for. Again, with all that negative gamma notional, implied volatility dropping, market makers are buying back their short hedges. And then finally, here's Bookmap. And this is showing the reversal now. These levels aren't actually, they are correct. This put wall level is not quite correct. It should be down about 3 points lower, where I have this note SUP for support. So again, ES, SPX, test that 3,900 level and rallies. And once it gets going, this yellow line is showing stop orders. Showing as price rises, these buy stop orders are contributing to price. Levels off, and then as price is ES, SPX start moving higher again, more stops fire off. And I have both the subchart and the on-chart stop indicator. And here we can see some of the large stop orders. That green dot, small green dot, 2,484, 1435, 894. So as price gets going up towards approaching the SPX 4,000 level, a lot of stops start firing. And also notice all the green dots there, aggressive buyers, market buy orders. And that is confirmed by the CVD line. That is the dark blue line. Oops. This dark blue line here. So a lot of contributing factors to the rally on Friday, but the one that you could anticipate and plan for was the Vanna rally, based on that large negative gamma, especially for SPY, and then all of the gamma expiring on Friday. Okay, any questions about that? And there's a question, YouTube, what's the significance of zero gamma? And according to Spotgamma, not necessarily that much. Spotgamma looks at a different level. They call it the volatility trigger, and that is their gamma flip level. And this gamma flip level or volatility level is the volatility trigger level, is their level at which gamma flips from negative below, or market maker gamma switches from negative below to positive above. So the zero gamma would actually be a level of zero gamma, but I think Spotgamma, at least, and what I follow, places more importance on the volatility trigger. Okay, I hope that was helpful. And now let's go through our positional analysis for today. And again, the thing to emphasize is using this process, again, you could have anticipated the rally. Okay, so let's go through our positional analysis for today. And what I want to do is start with levels on the charts. I'm going to go to, first of all, look at a couple of thinkorswim charts. So this is SPX for today. This is a 20-day, 1-hour chart. And this is showing the rally that started on Friday at the 3,900 level, has now today shot straight past the 4,000 level, and it appears to be prices heading up to the 4050 level, SPX 4050 level, which is the new call wall. So these are showing the levels in play. And a couple things to note, and I'll talk about this more, but the call wall has shifted higher to 4050, and actually the put wall shifted lower to 3,800 now. So here's the put wall down here and the call wall above. And the put wall is the strike with the largest net negative gamma, and that can be anticipated to act as support. And the call wall can be, you can anticipate that to act as resistance. So that's the big picture. The 20-day 1-hour chart, again showing the second test of the 3,900 level, and then the strong rally starting Friday and now moving up to the 4050 level. And let's just take a look at a closer end view. And this is a 2-day 1-minute chart of SPX, again showing the Spotgamma levels. And this is the rally continuing from Friday morning. And again, the 4,000 level here provided very little resistance, and prices now moving up to the 4050 level. All right, let's take a look at Bookmap now. This is ES. This is the S&P 500 futures. And this is pointing out the reversal higher at this around the 0 gamma level and the support level. And these levels are a little bit higher than they should be. Spotgamma is still using a 20-point difference between ES and SPX. So what we're looking at here, what I'm showing, I have two columns of levels. The first is Spotgamma Cloud Notes, and this is showing SPX levels that are important, as well as combo levels, which are SPX and SPY combined and converted to an SPX level, and then converted to an equivalent ES number by adding 20 points. And right now I have that difference at about 17 points. So that's one reason why I'm looking at the SPX charts in Thinkorswim to see the exact levels. So anyway, the reversal higher this morning at the support level or close to it, and then the rally up. Again, the 4,000 level offered very little resistance, and price is now above the ES 4050 level. All right, let's talk about shifts in levels now. Oh, and one other thing that I'm looking at is this is my own column of cloud notes, and I'm marking the support and resistance levels that are noted in the Spotgamma AM Founders Note, as well as big round numbers in ES, and then also SPY levels, the main key gamma levels in SPY, and those levels are correct. I calculate that ratio of SPY to ES just about every day. Okay, shifts in levels. There were quite a few shifts in levels, mostly higher. So first of all, the SPX volatility trigger increased from 39.15 to 39.45. And again, that is Spotgamma's proprietary gamma flip level. And interestingly, I mentioned the SPX put wall dropped from 3,900 to 3,800, and we'll look at the S&P 500 charts in just a moment. And then the SPY put wall actually increased from 385 to 390, and then call walls increased across the board. SPX, SPY, NDX, and QQQ call walls all increased higher. Traders are looking for a higher end of the trading range and accepting higher prices. And then the key gamma strikes for SPY, NDX, and QQQ increased as well, while the key gamma strike or the absolute gamma strike for SPX remains at 4,000. And the key gamma strike or the absolute gamma strike is the strike with the largest total absolute gamma. So let's take a look at the S&P 500 charts now, and we'll see where those gamma levels are. So here is SPX. There's the put wall down at 3,800. And then the key gamma strike or the absolute gamma strike, that's obvious. Strike with the total highest absolute gamma. Also note the significance of the 3,900 level. And then here is the 40-50 level. That's the call wall. So that is SPX. Those are the absolute gamma levels. Here's SPY. There's the put wall. And now the key gamma strike is at 395. And 400 is a significant level. That is a large gamma 1, LG1. And then the call wall is up at 410. So again, there were quite a few shifts higher in levels. Call walls across the board, and key gamma strike or absolute gamma strike for SPY, NDX, and QQQ. All right, let's take a look at some data now. And just to point out, gamma notional, so this is market maker's position on the gamma curve, has shifted to positive for SPX. So on Friday, SPX in the morning, Friday morning, was minus 558, and now it's 117. So it has shifted positive to a fairly neutral stance. And then SPY, recall, was minus 2187 on Friday morning, and now it's still negative. So market maker's gamma position in SPY is still negative, but not nearly as negative as it was on Friday. And let's take a look at Vanna models. And so this is just showing the neutral position in SPX, indicating that market makers their delta notional is not going to change a whole lot as price moves up and down, and they're not going to have that in this position at least at the beginning of the day. In their assuming a delta neutral position, they're not going to have much delta exposure to hedge as price moves up or down. Now that could certainly be changing today with this large price increase, but that was the situation before the open this morning. And SPY, again, still in a negative gamma. The market maker's position on the gamma curve is still negative gamma, indicating that market makers will need to sell futures as price decreases and buy back those futures as price increases. And one thing that I want to point out, this is just one quote from the AM Founders Note this morning, indicating that implied volatility remains near the low end of its remains near the low end of its fair value. So this is talking about VIX, or implied volatility, and that may reduce Vanna as a key driver of upside movement, particularly over 4,000. So there were some questions over the weekend about continued Vanna rally, and there is a partial answer. We'll take a look and see what's going on today. But that is, I think that's a pretty good assessment that VIX may not drop a lot lower, so there may not be that much Vanna fuel left in the tank. So we'll see. We'll see what VIX is doing. So let's take a look at VIX. And so there was a drop this morning, and this is VIX for today. So drop this morning down to around 1960, 19.6, 19.55, and then is now moving higher. Okay, so remember, I'm looking at all of this to develop a thesis for the day. And so I've talked about the shifts higher in levels for the main indices. the S&P 500 and the NASDAQ. And then this is a spreadsheet that I keep every day. These are the stocks on my watch list, and I track the key gamma strike for the previous day and the current day. And I update this every morning, and I color code the key gamma strike level based on whether it increased or decreased from the previous day. And note all the green here. So this is indicating that all these numbers highlighted in green increase from the previous day. So this is bullish. So given all this, I was looking for, first of all, given the decrease in gamma notional, or more positive, I was looking for a lower volatility than Friday, but definitely bullish. That was my directional bias, based on the increase in all the levels, the S&P 500, NASDAQ, and stocks. And I posted my watch list, the Spotgamma Hero watch list, in Discord, ranked from strongest to weakest signal, indicating that today I was bullish and looking for long entries. Okay, let's take a look at some setups. So the first one that I want to start with is Tesla. Let's go to Bookmap. And Tesla was at the top of this list this morning, this hero watch list. It was a great long setup. Multiple pullback entries. And price is heading for the multiple liquidity targets also. First high liquidity target at 140. 144, 145, and let's take a look at Hero and see what options traders were doing. Go to 1 day puts and calls. So traders are buying calls and selling puts in Tesla, and it looks like just recently they've started selling calls and stopped selling puts. So what I'm looking at is the rising orange line. That's indicating that traders are buying calls, and the rising blue line indicating that traders are selling puts, and just noticing that it has leveled off a little bit. And let's just change the look back period now to 30 minutes, and that'll give us a little bit more clarity about what's going on now. So it looks like traders are maybe taking profits on their calls. So this is just changing this rolling window or look back period to a shorter time frame. So we don't have all of that accumulated data from the entire day to look at. And I'm going to change that back. So there's the first setup that I want to look at, Tesla. Now let's take a look at the S&P 500. And I'm going to look at ES, SPX, and SPY. So ES, this is the S&P 500 futures, and it's combining the SPX and SPY hero signals into one signal. I'm going to zoom into the morning. So there was a bullish confirmation this morning. So note the positive delta trades, and then as price moves up towards SPX 4000 and SPY 400, traders start taking negative delta positions. So we can see what, and this is pretty typical behavior for the S&P 500. And sometimes this leads to a reversal and sometimes not. So it looks like traders started buying puts. Which makes a lot of sense given the low volatility. Traders buying puts. So there's the S&P 500, the ES. And now let's go back and we'll leave it on this and see what they're doing during the day. So they continue to buy puts. And again, this is looking at the SPX and SPY signals. So let's take a look at SPY now. And it looks pretty much the same. And I'm looking at questions on YouTube. Do I wait for the first 15 to 30 minutes to get in my trade? I look for a couple things. First is if I see a key gamma level and anticipate a reversal there. So I see hero, let's say today, I see hero rising, price drops down to a key gamma level, then I would look for an entry as close as possible to that and look to buy a call. Okay, and then for if I miss that entry, then I would look for a pullback to enter a trade. And RT asked, not sure how to time the trade in context of what Hero and Bookmap are indicating. And yeah, that can be a problem, especially when you're looking at this in real time. You know, of course, right now I'm looking at this in hindsight, but if you're real time, looking at real time, that's one reason that I'm starting to favor just buying options more and more. You don't have to be that precise with your entry. If you see, again, my thesis for today was bullish. And if you see price at a key gamma level, liquidity gamma level targets above, then just buy a call. That's the approach that I'm starting to take. If you're looking at Hero in real time to confirm a trend higher, then it can be a little bit difficult. But if you see a divergence, and I've talked about plenty of divergence entries, and anticipate that reversal at a key gamma level, that gives you time to prepare for that trade. Okay. So there were some, again, confirmation of the morning for the S&P 500, then not so much for the afternoon. So let's go on. So we looked at one great trade in Tesla, and the next one is Netflix. And notice now the signal, the Hero signal, showing the comparing the strength of the hero signal for the last 5 days and last 30 days is weak for SPX and SPY. And it remains strong for Netflix, the next one that I want to look at, as well as Tesla, the one that we just looked at. So if you're using hero as a signal, it's often much easier to interpret the signal for single stocks than the S&P 500. So now let's take a look at Netflix. Super strong today. Traders were buying calls all day, and that's driving price higher. Let's look at Bookmap. So there's Tesla, continues to move higher. Let's take a look at Netflix. Very strong rally. A little bit of a pause here at the 350 call wall, and price continues to move higher from liquidity level to the liquidity level. It looks like the next target above, if Netflix keeps going, is the 365 level. Let's just go back to hero and see what traders are doing. And you can always, what I like to do is change the rolling window period, the look back period, in the afternoon to give more clarity. So, in this case, with this big drop, traders were selling calls, and looks like it has not recovered that much. So let's take a look at the total signal. Back. And if I were looking for another long entry, I certainly would not. I would not be looking for long now. I'd want to see the hero line rising before taking another long entry. So it looks like the best move may have been this morning. All right, the next one, QQQ. Let me just take a quick look at something now, compare. So right now, QQQ is up 2.4% and SPY is up 1.4%. So that's what I thought. Technology continues to be strong. QQQ, very strong, easy to read correlation, much easier than the S&P 500. Traders are buying calls in QQQ. Very clear driver of price higher, shown by the rising orange line. Let's go take a look at Bookmap. Nice strong uptrend in the morning, consolidation around lunchtime, and some liquidity targets above. So plenty of pullback entries. As traders buy calls, market makers are selling the calls, and they have to buy QQQ or NQ futures to hedge their delta exposure. So this is going to be the theme for the next few stocks, is traders buying calls. Again, we saw that in Netflix, continues in QQQ, and as a stock trader, if you're looking for a long entry, this is something that you want to look for. It's a powerful driver of price action. And the next one is AMD. Strong rally in the morning, then consolidating after price hits the 75 call wall. Let's take a look at Hero. Take a look at AMD. And there you go. Rising orange line, traders buying calls. Market makers are selling the calls and buying stock to hedge their delta exposure. All right, the next one, Moderna. Looks like calls are definitely driving price action, at least up until about noon. Let's take a look at Bookmap. Now it looks like price has resumed its uptrend, heading toward the 200 key gamma strike. And note all the liquidity at that level. And then also note the reversal at this liquidity here around 195.50. 195.94, 40, 50, something around that level. So note the absorption at that level. Price resumes uptrend, heading up towards the 200 key gamma strike. Let's go back and take a look at Hero again. See if we can gain any insight by changing the rolling window. Yeah, that helps a little bit, showing that. Now, right now, it looks like options trades have leveled off. Price continues to rise. That may limit the ability for Moderna to get up to the 200 level. All right, the next was NVIDIA. Oops. And again, note the strong hero signal here. And traders have been buying calls. for most of the day, and it looks like they have started selling puts as well. All right, let's go take a look at Bookmap. NVIDIA. Strong move up to the 190 liquidity level. A lot of consolidation at that level, and then prices continued higher. So price reversed higher actually at the 180 call wall and never looked back. So again, traders buying calls, driving price higher. Let's go take a look at Hero. There are a couple of other stocks that I wanted to take a look at. Next one was Disney. There's some, I guess overall, pretty strong correlation. I'm not going to look at Bookmap. That's on my other computer, and I'm about out of time. So at least in the morning, I saw that traders were buying calls in Disney. Not nearly as good a setup as Tesla and NVIDIA and AMD, QQQ. There it is. And then the last one that I want to take a look at is IWM. And I've just started following this index, but traders were buying calls today in IWM. So just like QQQ, buying calls in IWM, driving price higher. Let's go take a look at Bookmap. So strong rally up until about 2 o'clock. Looks like price has met resistance at the 188 level. Let's just go back and take a look at Hero again. Change that look back period. So a little choppy there. Hero's making a lower high. As price increases, then price starts to drop. Okay, so we've already looked at the good setups, or the best setups. Tesla, Netflix, QQQ, AMD, Moderna, NVIDIA, and then analyzed the price action in the S&P 500 on Friday, talked about the bullish position analysis today for the S&P 500, as well as stocks, a lot of the stocks in my watch list. And that is all that I have for today. Are there any questions? Any questions, comments? Okay, I'm going to wrap it up. I want to thank everyone for watching. Thanks for your questions and comments, and I will see you tomorrow. Thanks again. Bye.